Checking in on the closing price of oil, and we have crude reversing course here today. Right now, it's moving to the downside, off around 0.4%, but still holding above that $60 level. Well, there's two things investors are keeping an eye on when it comes to oil. First, the UK government saying that 3 Iranian vessels attempted to block a British oil tanker from passing through the Strait of Hormuz. Now, Iran denies any involvement in this incident. And the other thing we're watching when it comes to oil is a major storm in the Gulf of Mexico. According to new figures from the Interior Department, roughly 53% of Gulf oil production and nearly 45% of nat gas production have been shut down due to evacuation. Joining us now is Joe Tigay, Chief Trading Officer at Equity Armour Investments. And Joe, when you take a look at those numbers just in terms of the production, the fact that it's disrupting so much production, talking about the storm that's brewing in the Gulf of Mexico, what does this mean for oil and nat gas prices?
Sure. In the short term, it means that supply has to be lower, so the price has to be higher. That's been the trend lately. It's really been the trend going back to last October when we saw oil start to reverse. Now, the long-term trend continues to be that increases in technology, increase in exploration has been lowering the price of oil, and also, a global slowdown. So for me, around the $60 level, it seems to me like we could be at the higher end of the range, albeit we have these short-term price increases via geopolitical, and the storm is driving it higher. So maybe that's why we sold off later in the day. That remains to be seen. We'll see. For me, long term, for it to really sustain this rally, I think we need to see a turnaround in the global growth story. Maybe we're seeing some green shoots out of Brazil lately, but again, we're going to watch that play out over the next few weeks.
Joe, you mentioned some of the geopolitical risks, the Iranian story that I mentioned with the UK ship in the intro here. How big of an impact do you see that having on the price of crude?
Well, it seems like today, at least this morning, it had an impact. People were worried about that. But I'll remind you that this is the type of incident we see time and time again. It only seems to flare up when people want to put attention on it. I don't think it fundamentally changes the price in crude, but I think it's a short term to the upside price pressure on crude, maybe a little geopolitical risk factor on there. But I think the bigger factor is the reduction of supply coming from the storm. It seems to be a slow-moving storm. It's going to shut down those undersea or deep water wells for a longer period of time than people thought. So that's going to decrease the supply, raising the price.
Joe, when it comes to, I guess, the Trump administration's pressure here on Iran, do you think it's working from your perspective?
Well, there seems to be a lot of pressure on them. These type of actions are picking up. There's more rhetoric coming out of the Iranian regime. It seems to be heating up, and it may be the case that we need to heat up a little bit more until we get to some sort of boiling point. Of course, a couple weeks ago, we seemed to be right there on the brink of war. How long this drags out for is anybody's guess, but I don't think the market's really putting in a significant premium on an actual hot war going on between Iran and the West, or United States in particular. So I think there's pressure on Iran for sure. They're feeling the heat. Their rhetoric is increasing. They're talking about their enrichment of their uranium. So it remains to be seen how that plays out over time. But it looks like for the short term, they want to cause some trouble in the Persian Gulf.
When it comes to the dollar is still pretty cheap. Do you think that this is a tailwind now for the price of oil going forward?
Oh yeah, of course, yeah. That's the last factor I forgot to bring up, is that as the dollar goes cheaper, everything priced in dollars is actually more expensive for people in dollars to buy. So one of those things, of course, is oil. That's a tailwind to oil. Another thing, as we lower rates and people are worried about inflation going haywire, people will want to buy assets that are hard assets, like commodities such as gold. We saw a big run up in gold lately, and oil will be another thing people could buy and say this is something tangible and real that isn't going to deflate.
All right, Joe Tigay, thanks so much for joining me today.